I'm Jake Ward. I've been a technology correspondent for a long time. I was back in my 20s when I wasn't bartending. I was working at an internet business magazine called The Industry Standard, and I was covering the first internet boom at a time when investors were just figuring out that there was a way to transform all kinds of markets, whether it was the pet food industry or the wine industry, whatever it was, there was a .com that had that industry's name on it. And that was the beginning of a venture capital explosion that once upon a time, funded semiconductors, but began to really fund software in the late 90s and early 2000s, to the point where today you have venture capital really seeping its way into all different parts of the economy and the world. And it's not just software anymore. It's housing, it's food, it's all sorts of essentials. And Catherine Bracy, who wrote a new book called World Eaters: How Venture Capital is Cannibalizing the Economy, she argues that, it's not just sort of the fault of tech people or, the tech itself. The ills of the modern era she lays at the feet of the money. Very often in my business, when I've been a correspondent all this time, when I'm asked, what do I cover? What are my, what's my beat? One of the ways I say it is, well, I cover technology, I cover science, I cover innovation, but fundamentally I cover capitalism. I cover the way that money ends up kind of perverting this stuff. And in Catherine, I found a really, I would say, a kindred spirit around that. So she is joining me on the very first episode of the Rip Current podcast to talk about her book and her hope for the possibility of trying to find some way through the world now that the people at the very top of government are from this world that she spent so much time covering. Catherine Bracy, Executive Director of Tech Equity, thank you so much for being on the Rip Current. I really appreciate it.
Yeah, thanks for having me.
So, your book, World Eaters, is about venture capital. I've covered technology for about 20, 25 years. I was in the first internet boom, covered it as a journalist then. And that was when I first became acquainted with venture capital. And I'm curious for you, like, help those of us who don't know as much about it as you do to understand just what is it? Why not just go to a bank and ask them for a loan for your business? Why do we need venture capital? Why does it exist to begin with?
Yeah, well, it started, it's a relatively new financial tool, I guess. It was invented, I guess we'll say, in like the middle of the 20th century. And it was a solution to a real problem, which was that there just weren't a lot of options for financing risky startups. You couldn't go to a bank because a bank was not going to take a bet on a startup that had no track record, that was typically building something that didn't really exist. It was a new technology. There was no real data to show that it could work and that the bank would, get their money back. So there was a group of civic and business leaders who recognized that this was a problem. There was a lot of new technology that was being developed. A lot of it had come out of World War II. There was a desire to, as part of the Cold War, show that capitalism was a system that could produce a good life for people. And part of that was, making sure there was an engine of growth and, that we were bringing new technologies that were going to make life more convenient and richer into people's lives. And so they started experimenting with some methodologies, and the one that they landed on was basically the way that venture capital works today, which is a portfolio approach. So
Mm.
venture capitalists raise money from wealthy institutions or families, pension funds or foundations, things like that. They put it into a fund and then they spread it out across many different companies. It's what's called a portfolio. And the idea is that by spreading that money across many different companies, they're hedging their bets that, the risk that is inherent in all of these companies will shake out in what's called a power law return, which means that most of the companies will fail or be very small returners, but there will be a handful
Mm.
that are huge outsized successes. It's a sort of high risk, high reward approach, and that um, that total sort of return in the portfolio when you lump all of those companies together will be higher than public market average. And it worked. And that, hypothesis was proven correct. And a lot more sort of investors started taking that approach, and the venture capital industry was born. But
And
it's
this it reminds me here of the Hollywood model, right? Like the 10th movie pays for the other 9. You're hoping that one blockbuster kind of makes it possible. But in this case, you're talking about a great deal more risk, and in theory, as a result, a great deal more reward.
yes. I mean, I don't know that much about Hollywood, but th-
You should take that on next. I think
yeah,
a lot of
right.
people would like you to see you do that.
Yeah, that description sounds about right.
Hmm. And so I mean, like you say, it's sort of it worked in the early days, or it
Worked,
seemed
yeah.
to. I mean, what did it make possible that a conventional bank loan, or the conventional sort of finance regime wouldn't have made possible back then?
Well, I mean, it commercialized a lot of new technology. I mean, it really, obviously, Silicon Valley is named after, the silicon chips. So, processing and hardware was kind of the beginning of it. It really revolutionized the personal computing industry. Um, And it also made possible a lot of financial gain. I mean, the investors became extremely wealthy, and what was at one time a niche sort of industry that was off in the citrus orchards of the Bay Area became a sort of center of the global financial system,
Mm.
or a very critical component of the global financial system. And, the money followed. I mean, I think part of where venture capital started to change is that, Wall Street and the sort of the financial industry started to understand this not as like the tech industry, but as another financial tool that they could optimize for their own ends.
Right, right. And so when I'm trying to think of the sort of the moment we are in now, and I wonder for you, like where it really specifically goes wrong. I'm thinking about the end of low interest rates. Money was more or less free. But I mean, the thesis, just for those who haven't read the book, as I understand it, you correct me if I don't summarize this properly, but it feels to me like your thesis is basically it's not inherently technology, it's not inherently the people. It's a thesis that I've come to a lot in my work, which is that basically once the money gets involved and the incentive structure of the investors gets involved, it kind of there's a gravitational pull to that pulls people off course. Am I
Yep.
thinking of this the right way?
Yeah, I mean, I sum it up as saying it's not about the technology, it's about the money.
Mm,
I think for those of us, that seems a little bit obvious, but I think we've been so, as a society, and really, especially as a community of, advocates who advocate for responsible technology and a responsible technology industry, a lot of us have not really focused on the business models. We are sort of looking at regulation at the level of the technology itself, and the technology itself doesn't have value. What infuses it with its value is the business model, is the incentive, the economic incentive structure around it. And that's where I think we have spent far too little time thinking about our theory of change, our analysis of the problem, and then, of course, what that means for our strategy and how we address it. So that's why I wrote the book. Uh,
mhm.
yeah.
And for you, the tell us a little bit about sort of where things go wrong. I don't know if there's any specific companies you want to
Oh, yeah.
mention, or sort of where it is, but like how
I'm
does it?
curious what you think. Where did it
Yeah,
go wrong?
well, okay, I love this as well. That's your. I'm very flattered that you would ask me.
You've been
For
around
me,
longer than I have.
I've so here's one for instance. Um, I was talking to somebody the other day who's trying to create a business around behavior treatment. I don't want to. This is somebody that I want to keep somewhat anonymous, and so at their request, and so I can't be too specific about the business. But the business involves um, understanding people's compulsive behavior in a way that's trying to help them with compulsive behavior. Right? This is a thing that's there. But this person, as they've gone around trying to recruit venture money, the venture firms that they've spoken to say, sort of look askance to at this notion and say and encourage instead perhaps exploiting the scientific understanding that this founder has of compulsive behavior to make a more compulsive product as opposed to a product that is going to somehow, help with that. And that feels like of a piece with what I have experienced in my career.
Yeah, I mean, I don't know when, exactly. I think some of this behavior existed around the time of the first, dot-com boom. Obviously, there was, a lot of hype, and, I think we could recognize a lot of what we see is wrong with the VC industry was going on then. But I certainly think that it was supercharged by low interest rates and, this sort of ZERP era. And it lasted for so long. It was like 10 years almost, that it kind of became deeply embedded as sort of like the basic, practice for a lot of VCs, like, don't know any different, right?
Mm,
Uh, and so because and then the industry started taking it for granted that money would just be free forever, and they could pump it into money-losing businesses forever, and we didn't have to worry about margins or profits or whatever. We could just worry about scale, and we'll figure out the business model later. Um, so that's probably, I think, the biggest factor. And but that's also not to say that just because we now look to be in an era where interest rates are going to be higher for longer, or maybe we'll be in a recession by the end of the end of the month, and they will be, you know, um, they will be coming down soon. Who knows? But if they're higher for longer, I don't know that that's really like going to work out all of the bad habits because VC is so used to operating in this way, it might take a little
if
bit longer to come around. And I see like a lot of irrational behavior around AI companies for sure. So there's still some of that bubble mentality. Like the discipline has not really embedded itself.
I, so I really want to get to AI because I feel like the AI hype that we are in right now is, I think it exacerbates a lot of what you write about in the book, or has the potential to exacerbate a lot of what you write about in the book. But I want to sort of get there in a logical way. And I'm thinking, so I think about the early days of Silicon Valley, where so much of the innovation was tied to hardware, which scales at a very sort of, it can only scale as much as you can build
Right.
physically.
Yeah.
Right. And then suddenly we entered this world of software where the
Yeah.
mandate became how do we 10x a company? How do we, grow it as fast as possible? Is that at the root of some of what you're
Yeah.
thinking about here?
Yeah. I mean, I guess that was, the dot-com era, right? Was more about software. Um, And so that's where, like, the frothiness definitely started coming into play, and you could build a company that was, basically had nothing behind it for, with 5 people and, but reaching millions. And there is something about the way that software scales that really just, like, was a perfect combination with the methodology of venture capital. I guess where I feel like things have really gone off the rails, and it's why the book is called World Eaters, because, Mark Andreessen wrote that famous essay in 2011 called Software is Eating the World. That methodology moved from the software industry to every industry. And now it was like,
Mm,
okay, every software is going to come into every corner of the economy and disrupt everything. And it's not just going to be about like, the software you run, your word processing software or whatever. It's going to be about, taxi companies and, blood testing and everything. Everything is a software company now. And that's where things I think started to get really bad. So, I guess we've named like three different moments where,
yeah.
we,
I mean, what you're describing to me, I feel like there was this little period in the sort of, you know, in the later 2010s, right, where every single meeting I went to, someone was telling me that they were about to be the Uber of whatever it was,
yeah,
the
the
Uber
sharing
of A.
for the sharing economy.
Yeah, the sharing economy, right? The gig economy, it became when people started thinking about it from a labor perspective, but like, yeah, this like everything was going to be Uberized,
Well, it became
and
came the gig economy when venture capitalists realized there wasn't any money in sharing. All the money
Right,
and
right, right, right. That makes a lot of sense. So there's this this the sort of the ethos, and you mentioned Mark Andreessen. I think that was a really interesting. I mean, such a smart way to name the book, because it does call back to this, to sort of one of the seminal thinkers of this thing, where this idea that you're supposed to not only create as low cost a disruptive force, but you're also supposed to go in and absolutely like lay waste to a market, to your competition in a market, right? There's no like, we're going to just, compete on price, make a cheaper apple, or whatever it was, cheaper, piece of fruit, and sell it to you in a nicer bag. It's this much more intense mantra, it feels to me, in terms of competition. Is that I mean, you spoke to a lot of folks who were on the receiving end of venture capital, and you've looked at this for so long. Like, how for people who don't know anything about VCs, does their sort of ethos differ from your conventional, finance person?
well, from your conventional finance person, I'm not sure. I'm not sure there's that much difference there, but I think they're kind of one and the same now. But I would say like the
Hmm.
practice of VC is really about establishing monopolies as quickly as possible, right? Like it is domination. And there are helpfully venture capitalists talk a lot in public about how they work. And they all have their own little sort of methodologies. They write books about it and everything. And one of them, one of the most famous ones is called Blitzscaling by Reid Hoffman.
Hmm.
Uh, and I mean, it's in the title. Um, I I think that the sort of steamroll approach, um, not only, I mean, it is valued because you get to market scale. I mean, the way to achieve that power law return that I talked about earlier is
Mm,
by viewing huge market scale. And the way that you do that fast is by operating in a very thoughtless way, and
hmm.
uh, and an intentionally thoughtless way, and using a sledgehammer and not a scalpel kind of thing. And I know we're going to talk about this later, but I think you see a lot of that in the way that Elon Musk is currently sort of blitzscaling his way across the federal government. Um, so yeah, I mean,
That's interesting. I haven't thought about applying that term to what's going on currently. That is a really
that's
smart
what's
use
been
of.
happening.
That's exactly right. That's exactly right. That is interesting. Yeah. So let's come to that a little bit later. But I really want to return to that. So yeah. So that ethos and that strategy, when you apply it to, you know uh, more sort of other markets, right, non-software kind of worlds, which it seems to me you're arguing is sort of where the trouble has often begun. Tell us where that goes wrong, and what people in that world who spoke to you for the book, what do they have to say about it?
Yeah. So, there's just I think there's the area that I care most about in this space, and where I think that there is the most potential for VC to have a harmful effect, is in the housing market.
Hmm.
It's obviously a physical world, literal bricks and mortar industry, where a playbook that is written for software companies is not going to fit very well. And it also happens to be an area of the economy that is both the cornerstone of an everyday person's economic prospects in life, right? Like where you live, how much you pay for housing, whether you can afford to buy a home. All these things are just like the basis for the American dream, basically. And also an area of the economy that is just like riddled with bias and discrimination historically, that is just like baked into the system. So when this sort of blitzscaling mentality comes into a market like that, it's just like you know, a real bad opportunity for the worst
Hmm.
comes. And I looked at a company, or a business model, I guess we'll say, in housing called rent to own.
Hmm.
which is where people who are on sort of the margins of homeownership, they're just like trying to get one foot on the bottom rung of the homeownership ladder. They can't qualify, or they just barely can't qualify for a traditional mortgage for whatever reason, but they really want to become homeowners. There are companies that will sort of buy the house for you and then rent it back to you. And then you pay them back over a period of years, until you are able to qualify for a mortgage and buy the home back from them. Um,
Sounds pretty good. Sounds in theory like that could be a good thing.
I mean, it could be, and I did highlight in the book, some models of that work for people that do actually convert the vast majority of people to homeownership on terms that are not exploitative. Like they cost a
Hmm.
little bit more, but you're paying for, the fact that you can't qualify for a mortgage in the same way that like your interest rate would be higher if you had a bad credit score.
Sure.
The VC-backed models are much more exploitative, and, I tried as much as I could to, like, compare apples to apples and show data because very hard to prove a negative in some ways to, like, dig out what is the role of VC in a lot of this, but for this one company I looked at called Divvy, which was at one point a multi-billion dollar unicorn, that had investment from Andreessen Horowitz, was very sort of bell of the ball startup in Silicon Valley. They were converting less than 50% of their customers. And at some point, you got to start to ask, like, well, what is actually the thing you're selling? Because it's not home ownership.
Hmm.
Um, only 50, less than 50. And what one of their staff members that I talked to about this said, it would actually go down over time as more people sort of aged through their contracts. They were just still so young. So
Wow.
it was, and these are people who are paying above market rate for the rent
Sure.
while they're waiting. They're buying the home back from the company at a much more inflated rate. They have no protections on the price. So if the house is not worth what they agreed to pay for it back, when they signed the contract, they're on the hook for that money. It's just like a really like risky deal. And most people don't understand what they're getting themselves into. That company just went out of business because the
Hmm.
house market is what it is, right? And they could not they went in thinking we are gonna be able to blitz scale. They started in 2021, they had a bunch of free money. They thought we can just go and buy all these single family homes across the country, and then we'll have this huge portfolio that we can leverage to get more loans. And reality struck. I still don't know what has happened to the people who live in those houses.
That's what I want to know. Yeah, who gets like
I
what
don't know.
happens when you get stranded in the in between world
I don't know.
by this
You
model?
know, I
Wow.
if I were an investigative journalist, that's the story I would be trying to
Hmm.
write. So if
Hmm.
there are any out
Hmm.
there listening and wanna
Hmm.
try to that, I would be curious to know. We couldn't even really get our hands on any of the rental or, purchase contracts that
Wow.
so
Wow.
clear. Mm, what
Let me
happened.
let's talk about, well, I don't know which way to go here. I really want to talk about AI with you because I'm so interested to hear your take on this, but I want to set it up a little bit more because I want to know, I want people listening here to understand just how for you and I'm assuming this is how you feel about it, but how for me, how alarming the AI world is when it comes to a system, the VC system that prioritizes, incredible efficiency and as few people on the payroll as possible and move as fast as you can and experiment live on your customers and, all of that stuff. You know what I mean? And I wonder if there's anything, you talk in the book about sort of the pressure, right? The way in which someone who may have started thinking, oh, we're going to be this kind of company, the pressure that they wind up under and how that changes even their operational plans.
Mhm.
Um, Help us think about that a little bit. Maybe explain a little of that to us.
And specifically in AI or just generally
No, just
how.
in general about venture capital. Like basically, when you sign the contract with the VC, the folks that I encounter, right, the young people that I encounter, the young entrepreneurs who get going, they are suddenly under the gun in this way that seems to physically exhaust them. They are cranking, and the word they of course use is runway, right? They only have a certain amount of runway,
Mhm.
and that suggests that once the plane gets to the end of the runway, it crashes and explodes, right? It's a very scary term for this. And so tell us a little bit about that, the sort of the pressure that what is it about, as opposed to just a conventional bank loan, which I think, it's because it's just a less high pressure environment somehow. What is it about VC money that makes it such a pressure cooker for founders?
Yeah, I wanna try to remember. So first of all, there's 2 stages that I think are important to talk about. One is when you're actually pitching, when you're actually
Hmm.
selling yourself to the VCs, and how that process, like, subtly and not so subtly shapes what the business is or can be. So, like, one, entrepreneur that I talked to told me, VCs ask us to lie to them in very specific ways. And
Oh,
the fact
wow.
what we're
What do
talking
they
about
mean by that? Yeah, what does that
well,
mean?
we're talking about companies that don't have a track record and, in theory, are building something that has never been built before. And
Right,
so
right.
there's no data to say, like, this is what the possibility is, for this tool or this company. You have to tell a story about what
Hmm.
could be, right? And so in some ways that this is like this is why I think venture capital is so rife with, frauds and grifters, because it attracts people who can tell that kind of story and sort of have a fluency with bending the truth. Um,
I mean, my first thought, right, Theranos,
yeah,
WeWork,
yeah,
right? That thing of fake it till you make it and have a great
e-
narrative ahead of time.
exactly, exactly. And there are many others who have kind of, just but for the grace of God, uh, landed on just the right side of that line. But most of them are encouraged to
Mm.
tell a bigger story, right? It's like, well, is this it's like from The Social Network, is, it's cool, is $1 billion, whatever. It's not
Yeah, right, right.
like, oh, okay, that's the story I have to tell. Um, and over the course of pitching to a few dozen investors, like every meeting kind of, adjust the perspective a little bit.
Mm.
You hit the slide,
Mm.
you add a zero, all of these things that you need to do in order to get the investor to believe that this could be that outsized returner that carries the fund and drives the power law. The investors know. I mean, they know better. They know that these
Mm.
companies aren't going to be that. So like it's just really funny to me when I hear them say that they don't, we only invest in certain types of companies. Like, that's not true. You give money to companies you know very well cannot be a unicorn all the time, because A, you have more money than there are good companies to invest it in. But B, like, you're buying lottery tickets and you're addicted to this like potential, like maybe it could be. And
Mm.
it doesn't have to be that for long. I just need to convince the next round investor that it could be that. So it's all very sort of divorced from any real value creation. So
Right.
that's the first part of it, is that pitch process. The second part is, now you've got the money. Okay, well, what do I do now? Like, and then an investor told me, we underwrite every company in the fund to be the fund returner. So in other words,
Mm.
they don't know which of those companies could be the outsized successes. So they will push every single one of them to, do the same thing that will, in their mind, optimize for being the outsized returner. And that means loading these companies up with risk that is not natural to the business,
Mm.
potentially
Mm.
means diverting them away from markets that they originally wanted to serve and that are the natural markets for these companies to serve what could be a potentially bigger market. It means skirting regulation. It means exploiting workers and customers.
Mm.
It's just whatever you can do to get to blitzscale, to like the market,
Yeah.
get to the market as quickly as possible.
What's so amazing about that, I mean, is, I have yet to meet a founder, at least in the Bay Area, who doesn't in some way believe that they're about to improve the world in some way. And when you get to the bigger companies that are very established, as a journalist, what I encounter all the time is there's a whole, eventually that spirit metastasizes into a whole administrative layer whose business like whose job is entirely to convince the employees that they're doing something great for the world, and as a result they should keep working there and not see their families and not talk to journalists and the rest of it. So there's that spirit, and it gets weaponized. But there's that spirit of world improving. Do you think that your average well-meaning, you know, just wants to make it easier to adopt dogs kind of Stanford grad can be pulled? Like, I mean, it doesn't feel to me like those kids would have any training in how to push back against
They have no
a
power,
VC.
the
Oh,
dynamic.
interesting.
Well, I
Right.
mean, d they d
Other than
it
the willingness to walk away from the card table. That's
yeah, I
it.
mean, not no power, and it does depend on the timing, like, when there was more money than anybody knew what to do with, I think the good opportunities had, those founders had more power, and, once they show that, like, oh, they might be the next Stripe or whatever, then they definitely have a lot of power. Um, but they have relatively little, certainly at the beginning.
Right.
And yeah, I outlined like kind of four categories of founders. I think there are some that are just, the Sam Bankman Frieds, the Elizabeth Holmes, the Adam Newmans that are like, I think I called them in the book lightly sociopathic. Like they are the grifters who are attracted to the space because they want to, run a con. Then there are the ones who are just like, they're not con men necessarily, but they're totally fine with the VC playbook and are happy to run it, excited to run it,
Mhm. Mhm.
and don't feel any sort of tension about that. Then the third group, which is the ones who I was so interested in, and the one mostly the people that I talked to, I called the conflicted altruist, or these are the ones that you're talking about, like the Stanford kid who wants to,
These are the
but
ones I bump into all the time. That's right. That's right.
it's just, I mean, I keep coming back to the word tragic and hearing a lot of their stories where they did have really good ideas, and these were
Right.
businesses could have been really valuable businesses. We're not talking about like social impact companies that are just like glorified nonprofits. We're
Mm.
talking about really $100 million, value businesses. Um, that they got pulled away from and all these, and the way they would tell me the story of how it happened was so subtle, and like the psychology of it was so interesting to me, and I tried to get into as much of that as I could in the book, but it's so hard to like get across the kind of emotion of those stories that they were telling. um
Mm.
Medium, but it's just like realizing that they were going to have to give up on the original customer that they wanted to serve, or that they were
Right.
getting fired by their investors because they had pushed back too hard, or their competitor who they had said no to a VC because they didn't wanna do it a certain way, and then they had a competitor who was willing to say yes and got all the money, and then, drowned them out because
Hmm.
they just couldn't compete. Like, these were, stories I heard dozens of times or read,
Hmm.
or and I think that's why I came to believe that venture capital is killing more value than it creates, just because there are
Yeah.
just many, you know, um, dead ideas out there from the most talented people in our country who are building these
Yeah.
companies and getting stomped on, basically.
So let's think now about about how AI changes this landscape. So there was this profile that Aaron Griffith of the New York Times wrote a few weeks ago of this new, leaner, meaner startup landscape made possible by AI. And I drew on it for a piece that I did for the Rip Current that was about the boast that Sam Altman, right, the original VC, I mean, right, he ran Y Combinator, which is this storied place to get your funding and get selected. Um, and he says that there's a tech CEO text group, which I've known about for a while. Man, would I do anything to be on whatever that is? I'm sure they're on Signal or WhatsApp, but like, supposedly all those dudes, and they're all dudes, are constantly texting each other about whatever Musk's doing or whatever's going on. Anyway, I would love to know more about that. But he says that the bet that they've made is that they're betting as to what year we'll see the first $1 billion single person company,
Uh-huh.
which is this like fantasy of
Mhm.
the efficiency minded Y Combinator type, right? Like that idea sounds so good, I'm sure, to a venture capitalist
Mhm.
because it's like the cartoon of doing it right. The Uber simplification, the blitz scaling, all of that, and through AI, it's all just concentrated in a single person. My argument is, oh, but wait a minute. If all of that value only goes to one person, I don't care how big a house they have, they're not going to have enough plumbers and servants and whatever else to keep the rest of the nation going. Like to me, that feels like an economic disaster. So that's for me, the one scary part of it. The good part of it maybe is that a lot of the people that Aaron Griffith interviewed, and I've talked to people like this, they say they don't have to take much in the way of venture capital, and they can keep their employment, their employees small. For me, I mean, since the 90s, I've been reporting on how non-white, non-male people haven't been able to get venture capital by and large. That's a really hard road, especially back then. It was an impossible road. And so maybe in a way, AI and being able to work this efficiently is a solution to that. I'd hope that would be true. Maybe it'll help people from keep having a nervous breakdown the way they do currently under the VC funding model. But then there's that Sam Altman bet that makes me so scared. I'm just curious how you see AI in this landscape.
Yeah, I mean, I don't know. I'm thinking about it now. I don't know that I have like a take that I feel
Mm.
super confident in, but I like that my mind's going in three different ways.
Yeah,
One is
think
like,
about it. Think about it with me.
first one is just like obviously there's a dystopianness to this that's like very scary. The second is, well, maybe this makes it a lot easier for people to start companies and um and then we're maybe that's a good world where if everybody now can be their own sort of boss or entrepreneur, they're doing, I don't know, I don't know that that would really work, but like, yeah, you can have a little bit more power as an entrepreneur to start your own thing and do with it as you please. Now sounds like um it's limited, right? Like, it kinda I can't really think through all of the potential, use cases for it, but, like, if you're doing anything in the physical world, you're gonna need people on some level or some infrastructure. Um, and then the third thing I think of when it's like, "Oh, well, these companies aren't gonna need that much capital to run," is like, well, where do limited partners put all the money then that they're now currently
Mm.
allocating to venture capital? And it's not that much, um, compared to, like, their investments in public markets, but it's a pretty penny. Like, I wonder what kind of ramifications that would have for their investing.
Hmm. Hmm.
Yeah,
Well, and
and
this takes us. Sorry, go ahead. Go ahead, please.
I was just gonna say, like, part of, uh, what I'm arguing for in the book is actually a smaller scale of investor. Like, we need
Right.
fewer mega funds and a greater number of smaller funds that are doing sort of um, more trying to hit doubles and triples rather than grand slams. So maybe this is helpful in that way. I don't know. I'm not sure exactly
Yeah.
what I mean, but in general, AI uh, work um, freaks me out. Uh, If I'm taking off
Yeah.
the like, VC hat of it all, I'm very worried about the future of workers. Um,
I mean, right. You've got the Bank of Singapore just announced the other day that 3,000 people will be let go, and then in the coming, I think it's 3 years or something. And they were the first big bank to really just say it out loud. Because of AI, we're not going to need these people anymore, and that's going to be it. And I think when you multiply that across lawyers, CPAs, engineers, architects, all of these jobs that had to do with, you know, drawing on expertise, drawing on precedent, all of that kind of stuff. Um, yeah, I agree with you. I think I mean, you look, your day job is looking at labor, how tech changes labor. I agree with you. I think that this is it's a, and increasingly we don't live in a world in which people seem to feel that it's the federal government's job to protect our jobs or our ability to get a job.
yeah, I mean, the thing I was thinking about when you said a single person company, I bet by that. I mean, they are obsessed with like the lone individual. There's the latest, the Silicon Valley obsession is founder mode and how it's really just all about the founder and all of this. Um, I wonder if they think of that as like there's one person who owns all the wealth, but then there are, uh, all these other workers who provide value to the company by doing work on platforms. They're content moderators, they're training data or, cleaning data, they're training models, they're doing whatever to behind the scenes to actually make it work. And what we've done is sort of like invisibilize all of that. So we've
Hmm.
fractionated it. We've sliced and diced it into such little tasks that it's not just like one human who has a job. It's like millions of people who are, they're all doing tasks on platforms. Uh, and do they think of that like, do those people count as people in
Hmm.
this net that they've made about,
You
what
know
a
what
wo
that reminds me of? That reminds me of of the term. It's funny when I was thinking of what I was going to call the newsletter that I published, the Rip Current. One, because I was going to, by and large, be talking about tech, and so much of it was going to be about sort of the billionaire moment we're in and all this stuff. But I was going to call it NPC,
Yeah.
because that is sort of that's the language that so many of these guys use, or they talk about agents versus NPCs, people who have agency in an organization versus the people who are really just background actors. And I have a friend who says of tech people, of tech sort of leaders, he's like, these are people who've watched Akira too many times and don't really understand what it's about. That they think it's about a little group of people at the top of the plot who have superhuman powers, not all of the screaming people who are running around in the streets in the background. And I that's the vibe I get from the kind of thing you're describing, is that it's not thinking about people as people. It's really a very hierarchical idea about how the economy is supposed to work.
Yep.
Yeah. So let's talk about solutions a little bit. I you made a great appearance on KQD's forum this morning with Alexis Madrigal the morning that we're recording this, and I heard a couple of different founders call in to defend venture
Yeah.
capital and its role in their life.
Use Theranos as a positive example, which I
Yeah,
thought,
that was a weird one. Yeah, one guy thought Theranos should be defended because its idea was such a good one. I thought Alexis was very funny, saying, "Yeah, if you could turn lead into gold, that'd be great too, but that can't happen. That's not a can't defend the idea on that." But when you think about, I mean, you've had a day now to think about those kinds of people coming at you. What you know, what is it you're arguing for? Do you want to do away with venture capital outright? Do you want to make it illegal to do venture capital? Like, what is it that you would like to see change?
now, when I started writing the book, I thought it would be more of a story about, everything that's wrong with VC and the companies that have, that they've invested in that have gone badly. And as we were just talking about, well, the experience I had was actually talking to all these founders who had had these like really tragic experiences. And I realized that
Mm,
it's actually about the companies that they weren't invested in and like what would it mean? Like the harm that was being caused was, yeah, like the WeWorks and the Ubers and the Divvies of the world, but also just like all of the things that didn't get funded, all of the solutions that never got to come to market that would
mm,
actually the housing market or create economic opportunities for marginalized people. um, and so the question about like, so that's all to say, like, I don't think venture capital should be illegal. In fact, like, I probably came to believe in like its original purpose even more that yes, we need capital to fund risky technological breakthroughs and to bring those to market. Absolutely. But it's not, and again, like back to the title of the book, World Eaters, it's not the entire economy. And we
mm,
need to
mhm,
understand like what is the right tool for the right problem. And we've used one tool, venture capital, to address all of these market failures or market opportunities. And that's where the real problem exists. So what would it mean for venture capital itself to innovate, right? What would it mean for them to use a different kind of playbook? What would it mean
mm,
for question the assumptions that underlie the power law? Are there other ways that you can align financial incentives with companies that are only creating, a $500 million returns rather than, $50 billion returns or whatever? Um, and that's what I'm hoping we can do is like not make it harder to invest, but to create a more diverse ecosystem of financial tools for innovative, risky startups.
It is, I've been, and I'm curious what your sort of philosophical attitude is about this. Like, so I wrote this book called The Loop, that was sort of a general critique of what's coming in with AI. I started writing it in 2016, came out in
Oh, I don't know.
2022. Oh yeah. Uh,
Sorry.
You want to talk about a guy who's sick of a topic? That's this
Well,
guy.
also, like, it totally changed. I felt that
Yeah,
every day. Every day something would happen in the news and I'm like, shit, now I gotta go rewrite that entire
totally.
section.
Oh, I had a friend of mine was like, "Why are you writing this book? My God, you're gonna like, how do you deal with the fact that yeah, it'll be out of date by the time it comes to print?" And in a way, it is, but because ChatGPT came out like 9 months after the book did, and so I very quickly, my publisher called me up and was like, "We're doing a paperback." I was like, "Okay, great." And he was like, I was like, "Can I write a new forward?" He was like, "Yes, you may." And
Yeah.
that's as much as I got to do. But in this case, my overall critique is just to sort of be like, you know, we are about to hand over. I mean, my theory, my hypothesis is and was and seems to be right. We're going to hand over these really essential parts of our lives to AI systems that are totally unproven, totally opaque. We're not going to know how they make decisions, and our brains. Most of the book is devoted to just the ways in which behavioral science has taught us that our brains are going to be incapable of resisting the intoxicating temptation to trust everything that AI tells us. It makes life easier, and the brain is so much. It's just built to accept the easiest possible shortcut. Anyway, all of that is to say, not to talk about my book, but the critique I get from people I speak to in the industry is, well, what the hell do you want me to do about that? All we can do. Like I did a piece once for the New York Times Magazine about something called genoeconomics, geneticists and economists working together to predict social outcomes based on your genes. Super creepy potential. They have good intentions with it, but super creepy, right? And I went to a meeting with them after the piece had come out, and they sort of yelled at me about it. I went to a big gathering of these experts, and they basically said, we have to follow the evidence where it leads. We're scientists, and we have to follow the research where it leads. And in speaking about the loop and AI, I basically I was trying to say, we need to be more thoughtful about this. But I'm curious how you feel about like I don't quite know what the instrument of that is supposed to be anymore. I have lost a little bit of my like I thought it was going to be Lena Khan. I thought it was going to be the FTC. I thought it was going to be maybe the Consumer Finance Protection Bureau. You know, and I'm curious. Like, do you think is there an instrument? Is there people who are listening to this? Is there something that they can do? Like, what do you think? Is there a mechanism for slowing this down?
Probably not. Um, I don't know. I'm trying to figure out how to say this without sounding too like doomerish. The most important, the rabbit hole I went down after the election, to sort of like understand the world we live in now is called the rise and fall of the neoliberal order.
Hmm.
And I think that's the
Is
full
that a
title.
book? That's a book.
Gary Gersel is the author.
Hmm.
And, you know, um, uh, oh, sorry, I forgot where I was going with this. So, um, where,
Mechanisms for slow for turning it,
yeah,
slowing it down. Like I like your idea very much of, you know, venture capital should be for what it was originally for, and
yeah,
there should be greater tolerance for moving a little slower when it comes to investing in housing and the rest of
yeah. I mean, I feel like before the election, if we had had a different outcome in the election, maybe we could have had a like smooth landing to that place where sort of interest rates are higher for longer. There's a window of opportunity, and we just easily like VCs start to adjust the way that they invest, and it's sort of a seamless move. Now, I think we are the way and this is why I started talking about this book. He lays out, basically that there are periods of history that are defined by the economic system. And actually, it's not the politicians who bring in the system, they are sort of vessels for it. They are sort of actors that don't have really the ability to control those economic forces, but they will like their personalities or their style or whatever will match the thing that actually works in that moment. And so Obama or Clinton is the perfect example of sort of the right fit for the height of the neoliberal moment that was about sort of free markets will fix everything and we're going to, it's the end of history and yada yada. And actually I think BC was very aligned with that like
Mm,
part of history. There's the New Deal, which was a totally different economic order. And, FDR was kind of like the right person for that moment, and he was very successful. So then Trump comes along. And the way that I know, and this is all sort of in the wake of the financial crisis in 2008, right? Um, Trump comes along and was like, these motherfuckers didn't do anything for you in the wake of that
mm,
crisis. We're getting screwed. And like brought in a sort of populist message. Bernie also, in some ways, really spoke to that. And that's like the first sort of indicator that like a new economic order is upon us. And I don't
mm,
think there's much we can do. These new economic orders are usually, as Gary Gersel says, like defined by, moments of history. I think this new economic order, or whatever we're coming into, is sort of, I think, at least what we're living in now, is defined by the Great Recession and the fact that government didn't really do it. They took a free market approach to sort of solving that problem, and it really fucked a lot of people over. Um, and now we've sort of stumbled into fascism as a
mm,
result. And I
mm,
don't know, like, it feels to me like there's no soft landing in this. Like,
right.
something bad has to happen in order for us to get to a place where we're able to have a conversation about how we can build something new.
Yeah.
And,
Yeah.
uh, I think the only way I know how to respond to that sense is that, we're gonna need a positive vision for what comes
Mm,
next, right? Like,
mm,
gonna burn it all down. What are we gonna build in its place?
yeah.
And it,
I've been spending a huge amount of time looking at like what the like other parallel places in history and other parallel experiences in history
yeah,
where a neoliberal order was saw a financial crisis. Like Portugal is one that I've been really obsessed with lately. They had the same thing. Big financial crisis after World War One. The old school kind of progressive, it was really a monarchy, but the sort of progressives of that time had no answer. And along comes a finance minister who becomes prime minister and becomes a fascist dictator for 50 years, and and Portugal, you know, it took a long time. It took a long time for that to break through. I just hope that the same spirit of innovation and creativity and so forth that you're describing in your book as having been kind of, I don't know if this is the right word, but perverted by the incentive structure of VCs. I hope that that spirit can find its place in
I
pushing
think
back against this.
yeah, I mean, that's what I think my long-term project is with this book. I also think, going back to Elon blitzscaling his way across the government, like this mindset, this VC mindset has taken over. And I
Yeah,
think
what is it? What is it? How do you think they see the project of government? What is it that you think they're up to?
well, Mark Andreessen helpfully sort of spelled this out. He went on a bunch of podcasts after the election and he described this thing that he calls the deal. And basically, what he described was the neoliberal order, which is like,
Hmm.
I was told that all I needed to do was go out and build all this technology and create all
Right.
this wealth and like would
Right.
be good for
Obama and
society.
Harris and Biden told me they would leave me alone.
Not
Kind of,
Biden, not
yeah.
no, Biden is where it all goes
Sorry,
sideways.
sorry. Biden's where it went wrong, but right. The like
Clinton,
Democrats before now
Obama.
had just left us alone.
Yeah,
Right.
it was go do this, like, you building all of this is an inherent good, and, like, the societal goods that we hope for will flow from you operating in this way, and our job is just to kind of, like, enable you, get out of your way, provide you the infrastructure that you need to do these things, and then in exchange, like, we will leave you alone and call you heroes, which is actually a very
Right.
important part of the deal, And then Biden came along, Bernie Sanders came along. I mean, politicians came along, Trump came along. Like Trump threatened to throw Mark Zuckerberg in jail, you know. So this is
Hmm.
like whatever. We're kind of a rewrite of history, but they came along and they were like, these guys are fucking you. Um, and
Hmm.
tried to push back and they freaked out. Like that was a threat to their order. And I think
Hmm.
a lot of why we see them running to Trump now is like a desperate, like Trump sees value in having them around, so he's going to let them do whatever they want, um, even if he doesn't really, it's not what he ran on. Um, and they're kind of like, well, we know how to do everything, so we're just going to run this playbook on the federal government. It's the ultimate in world eating, right? Uh,
Hmm.
so yeah, I mean, they're gonna I think that our best option, if people are looking for like, what is one thing I can do?
Yeah.
Make
Please,
make
Catherine Bracy, what can we do?
make Elon poor again. Like that's the quickest way out
Hmm.
of this, I think. I think, no, this is not, none of this is popular, right? And the thing that is the stranglehold that he has on our system is that he can primary any Republican. Like the Republicans could end this shit right now if they were deathly afraid of Elon Musk throwing money into their race. And and so we need like he's lost so much money in just the last few days, like that he was so desperate that he's out on the front lawn of the White House with Trump, like selling cars. I don't know if you saw that today, but
I
like,
sure did. I sure
you
did, in violation of every ethics rule. That's
there is
right.
no clearer sign in the world to me that they are shook, right? That the
Hmm.
loss of value in Tesla was a huge blow to Elon. So keep it up. Sell your Tesla. Sell your Tesla stock.
Hmm.
Go. I'm going to find a Tesla dealership this weekend, and there's a protest at my local Tesla store every Saturday from noon to 1. I bet there's one near here. It is freaking them out. Like we need
Hmm.
to Elon poor again so we can not have this stranglehold over our democracy. And if we can loosen that hold, I think that could break a little bit of the fever and at least like lessen the chances of the worst possible harms that could
Yeah.
come from this.
Catherine Bracy is executive director of Tech Equity, and she's the author of World Eaters: How Venture Capital is Cannibalizing the Economy. A really fascinating book, and I really appreciate you spending a full hour with me. Thank you so
No,
much.
no fun.
That was Catherine Bracy, the author of World Eaters: How Venture Capital is Cannibalizing the Economy. She's also the executive director of Tech Equity. It is a nonprofit here in Oakland that looks at the intersection of basically how tech is messing with labor and messing with housing. You can see, you should buy the book. You should read that. And she's making really interesting appearances all over the place. And you can also look into Tech Equity and follow their work. That's a really important part of it as well. The Rip Current is a production of, well, it's just me right now. And it's a weekly look at all sorts of topics from science and technology to just, the weirdness of human behavior. You can subscribe on Substack at theripcurrent.com and tune in next week. I really appreciate it.